And welcome to the show. This is Joe Sheehan and my co-host,
Greg Larson.
Hey, Jim.
Yo.
He's in the studio, running the board, doing amazing.
King of the
crazy
buttons.
stuff. Yeah, well, you know what we're gonna do today? You know, we've often declared this show a free zone for certain things. Like, remember when Obamacare was out?
Right.
And we said this is an Obamacare free zone. We're not going to talk about healthcare on the. And what was the other one, Jim? We had another. There was another,
Trump free.
Well,
we were
we
Trump
haven't
did
done
Trump
that.
trivia last week.
We haven't done that here yet.
Yeah.
But what was the other big controversy that came up, and we threw that on?
Benghazi was another.
I think
one.
Benghazi free zone.
Okay,
Yeah,
yeah.
we try to keep those things out of this show. I'm almost with everybody else though. The Trump thing is so. It's like it's like telling your kids you can't go to the circus.
Yeah.
You know, I mean, and I'm not talking about just him.
Oh yeah.
I would love, I have, as you know, I had lots of interest, and actually one of the things I was actually headed to get my PhD in educational psychology along one of my roads in this
I
path.
was headed to get my PhD in Miller Lite.
There we go. Barley utilization. I was in the barley utilization processing synthesis program. But no, if my friend, and of course it just turned out that I'm an Etch-a-Sketch in an iPad world. There was just no way that I was going to fit with the rest of the PhDs in the world. So, I had to become a mortgage guy. I don't know if anybody feels comfortable about that, but I look at this, and if I was a social psychologist in the area with the specialization in influence and competition,
Yeah.
I would love to be watching this right now like a junkie, because everything blows me away. And also, what I would love to do is I'd love to have on my team. Here we go. The show must go on. Who wants this election to end?
Right.
You should almost come out. You should almost come out with some sort of legislative extension to the election. No. Sorry.
Yep.
Brock, you're gonna have to serve another 3 years because we can't let this end.
Yeah.
But just for entertainment purposes. But you, and I would love to be connected with somebody who's on the other side of it. Somebody who is if you had that whole influence competition, but then I would also love to be involved with a sociologist on the mass society media specialization.
Yeah.
Because like this morning, I was watching. We'll get to the interest rates in a minute, folks. But I've been gone for a while, so
Interest rates haven't changed.
yeah,
us,
they
so
haven't
it's
changed.
boring.
Yeah, interest rates. Guess what? Low. Going to be low again. It's like before we get back to that Trump thing, I was watching a comedian talk about the winters in Canada, the winter forecast in Canada, and the weatherman gets up on Monday night and goes, "Weather tonight in Canada, freaking freezing." Yeah. and then he goes, "And forecast for tomorrow, freaking freezing, and through the rest of the week till Sunday, freaking freezing." Well, that's our interest rate forecast.
There you go.
Low, gonna be low, gonna stay low. Someday they're gonna go up.
Yeah.
There we go. Interest rates for today. So, but I would love to be talking, because I was watching this whole thing with the Trump, and somebody's got to take him on. So everybody's like, well, the media was almost like clamoring for Rubio to take him on.
Yeah.
Did you guys see that differently?
Yeah. No.
Did you see it's almost like the reporters are like, you know what you got to do?
Yeah.
You got to go take him on. It's almost like somebody's got to stop him. You're the guy to do it. I mean, it's like almost like a playground, right?
Yeah.
But it was like the media
That's
doing
the
it,
whole
right?
deal. These are not debates; they're playground fights.
So he
your
does
mama's
it.
Ugly,
So he does it. So he thinks I'm the guy to step up and do it. So I'm listening to the same people this morning as I'm getting ready for it, and they're like, well, he's really going to regret that.
Yeah.
This is really just like everybody who takes on Trump just winds up going into oblivion. And, I think Marco's looking back really right now 2 weeks ago to that strategy, and he's really regretting taking that strategy. I'm going, he's regretting taking. You guys were begging him to take it on. Now you're acting like he's the biggest idiot in the world for having done it. And the beautiful part of it is here's what I think. I think that somehow Trump bought, paid for, and has the psychological profiles on all these reporters.
Wouldn't surprise me at all.
Because
Could happen.
because he sits there and it's almost like he picks the fight.
Yeah.
He gets the fight. He wins. So then last night, there's snippets of the interview from him last night going, well, when Marco was attacking me, that just really wasn't him. It just wasn't him. He just deviated from his plan.
Yeah.
It was a bad move on his part. Bad move. Now it's like he's got all this compassion for Marco, and he's talking like the media. It's almost like he's like, the media's right. That just wasn't him. It was a bad plan on his part.
Well, that is the thing. I mean, there are people who can look at these reporters and analyze them psychologically.
Sure.
Wolf Blitzer, what's his deal? Well, I think he's this, that, and the other.
Yeah, I think he's calling their game before they.
Absolutely. Don't ever say this guy is crazy or he's stupid or he doesn't know what he's doing. Everything he does, he knows exactly what he's going to do before he does it. There's absolutely no question about that. You don't get to where he is in business and you don't manage and do things the way he does in business, which, by the way, are quite admirable if you really look at it. I mean, he's got one of the best records of female employees and promotion and all that kind of stuff.
I can tell you firsthand, having lived in Atlantic City, the people who work for the man, at least there, they swear by him. They say he's a great boss.
Yeah.
I don't know either way. I just, like I said, the show must go on. This is like going to the circus. I couldn't even avoid talking about it today. I don't even want us to do a Trump-free zone because if something comes up regarding this guy, who doesn't want to talk about it? 663-1270 if you want to call into our show. We're going to, 663-1270. We are going to, after the break, we are going to talk a little bit about it. We'll give you the interest rate update. Part of why I bring up Trump is I was in a conference in New Orleans. The Community Mortgage Lenders of America talked about the election and what it means to mortgage. And I did want to talk, politically speaking, a little bit about what the election results mean to the housing industry today and kind of bring that up. So I don't know if we can do a Trump-free zone and talk about that anyway.
Currently, it's 39.
The Red River Farm Network. Ag News is here on Super Talk 1270.
And we are back. All right, let's hit the interest rate updates. European Central Bank Chief Super Mario Draghi added more monetary stimulus than expected this morning, sending U.S. stocks higher in the expense of bond markets. So rates are getting a little bit worse today. However, it is worth noting that Mr. Draghi just mentioned that rates may not have to be cut further. Stocks are since off of their best levels and bonds off of their worst. So weekly initial jobless claims fell 18,259, representing a 5-month low initially, which, jobs, the Fed tied interest rates to jobs a while back under Bernanke. So 300K mark for a year, a stretch not seen since the early 1970s. So we keep having better and better job news in terms of people being the jobless claims. Seemingly, though, we still have a 40% chance of recession. So that's why this is interesting. That's why mortgage market guys commenting on it. It's interesting. Job numbers are so good with still this fear of inflation out there. And, of course, we just recently got the news a couple weeks ago, Moody rating North Dakota in a recession. Everyone is going with negative rates while the U.S. is trying to hike rates. Something is wrong. The ECB cut its deposit rates to negative 0.4%. So now we got the whole world in that sandbox. For banks depositing money at the ECB, meaning banks are being changed or charged for money. The hopes are that the measure will encourage banks to lend money to customers. We are not sure that will work. The central bank also expanded its QE program by 20 billion euros to 80 billion euros. A big takeaway for us, Draghi mentioned a real threat of deflation, hence the extraordinary monetary measures. Deflation abroad means deflation in the U.S. Deflation in the U.S. means continued low rates. Hey, the guy that wrote this predicted low rates until 2020 minimum. So he's been right. He ruled that prediction out in 2010. I think it was 2010. He predicted low interest rates to 2020. He's doing a pretty good job. So, and that is true. The idea that there's negative interest rates all over the world is this idea of deflation, not inflation. We don't have energy prices in there to boil up any inflation. That's certainly gone, which speaks to why we are in the middle of a recession, or rated by one agency finally to be in recession, and that's the energy production out of the West, obviously. So right now, interest rates look safe in terms of the Fed is probably likely to continue to try to make increases when it can. I think the opinion is that they'll probably be postponing the next one, but they do want to. So they're 100% want to raise rates. They're just trying to figure out how to do it without striking a chord that winds up creating a pop in the market. And probably I think some of us are even in agreement that even if it causes a correction in the market, they should do it, because the only thing a Fed can do in their part of fighting an inflation is lower interest rates or spend money. Well, they've already spent a lot of money, and now the rest of the world's spending a lot of money. So what can they lower interest rates from? They just, we talk about this all the time. They're the Barney Fife. They're the Barney Fife. They got a bullet in their pocket. Yeah, that's right. And we, I think it's a good idea. Right now, they really can't lower interest rates to fight a recession because they don't have it. So I think it's a really good idea to put a few more bullets in the pocket. However, to be fair to them, being just like Heidi called me, just one guy from North Dakota. just the opinion of one guy from North Dakota, like Senator Heitkamp told me. Their deflation is the bigger fear, always.
I say this calls for action, and now nip it in the
bud. And that is really the approach they have to take regarding deflation, which makes me wonder if they're being completely on. And that's what the Mortgage Market Guide is saying here. Are we getting a real honest answer about the real threat of deflation? And because deflation, that happens, it's a black hole. Inflation, you can always fight it. You can always fight it. Deflation, you're on your heels. And, all of a sudden, nothing's worth anything. And it even gets hard to trade, So,
but that's just your opinion.
That's just just an opinion of one guy from North Dakota.
Possibly a qualified opinion, but it's just
yeah. Well, I mean, it's based on a guy that's been right here about 6 years in a row on interest rates, when every economist in the world has predicted increasing interest rates since 2009, and we haven't seen that happen yet. And that's what this guy's been saying. So I'm gonna go ahead and stick with guys like this. Like I said, you know what? There's not just a guide. When you're going to the mountain, when you're going to go through that mountain pass that only a few people have been through, there's Jim Bridger. And the other guy.
And the other guy.
And the other guy, welcome to the Donner Party.
Yeah.
So I'll stick with Jim.
There you go.
Anyway,
good
so.
Jim. Say, you know what
Not
happened
if we're going to do the Donner Party.
Do you know what happened today?
What happened today?
In 1959 in Tibet.
Has something to do with the Dalai Lama, I'll bet.
This is the day that the Tibetan monks surrounded the temple in Lhasa. I can't pronounce it. Anyway, and prevented the Chinese from arresting the Dalai Lama.
Yeah.
And
the CIA, they got him out, right?
Yeah, and allowed the CIA to sneak in and get him out. And so he's been in exile ever since. Yeah. So the anticipation was that the Chinese communists would kill all of the monks. And they didn't get that done. And so it was a peaceful deal. Got him out.
Don't you wonder, you look back and then it's great that they saved the Dalai Lama.
Yeah.
But don't you almost wonder if there wouldn't have been worse for did the Chinese did they think about how bad that would have been for them if they'd succeeded?
Who knows?
I mean, the Chinese, they got a couple billion people to spare, I know. But if the whole world hates you, and that would have been the outcome. The outcome would have been, it'd be China against
the world,
everyone. Yeah. I think even every religion in the world, I think, respects the Dalai Lama. I mean, not necessarily as prescribed to his methods of practice or what he believes, but I think everybody respects that he's a peaceful leader.
Yeah.
And looks to fight the human.
Well, Mao Zedong said some crazy things. Now, whether he meant it or whether he was just trying to win through intimidation, we don't know. But he said some things that were just scared the pants off of people. He said, nuclear war? Yeah, we got more people than anybody else, so we'll have people left over.
Yeah.
We're not concerned.
But what do you do when the whole world hates you, though?
Yeah.
Oh, yeah.
And I don't know if that would have been recoverable. You persecute the Dalai Lama.
Well, eventually he had to come to the table. Mao did with Nixon.
Yeah. I mean, You persecuting the Dalai Lama is saying like I hate puppies.
Yeah.
Well, it's like
You
the
know,
guy
I-
shooting the Pope a few years ago.
Yeah, the Pope would be a great. That'd be like capturing and imprisoning the Pope. It'd be really similar.
It's like Eddie Murphy said. I guess you figure you're going to hell anyway. You just don't want to wait in line.
It's
Oh, you shot the Pope. You're good.
Yeah. Okay, you can come first. Yeah. But it's interesting how one small decision will affect the entire world. Because also in this day, 1940, Undersecretary, U.S. Undersecretary to of the Secretary of State Sumner Welles tried to broker a peace agreement in Europe. He got everybody to agree to it. Hitler, Mussolini, all the folks agreed to this peace accord in 1940. He went to Britain, presented it to then Prime Minister Neville Chamberlain. Chamberlain denied it, declined the deal. Quote, things in Europe weren't that imminent. Oops.
Don't.
And at the same time, you wonder if as atrocious and horrific as World War II was and the casualties, if you have a peace accord, is the world better with Nazism surviving today?
Who knows?
Because would that have given them a peaceful umbrella to let that fester even longer?
Yeah.
And
as a student of history, I think the peace accord would have lasted about a year, and Hitler still would have gone in.
Hitler would have double-crossed him anyway. As
he had to support his economy. That was the whole
So-
thing. Feed his people. That's what he had to do to try to create the. So anyway, so let's go back to what's going on in politics that affects your owning of a home. Well, and we'll try to break this down. So the CMLA, the Community Mortgage Lenders of America, they did a presentation when we were in New Orleans about who's going to win, who's going to lose. And here's the crazy thing about it: nobody knows right now.
Nobody.
There are great public servants in the Senate and House who are likely to lose elections on both sides for the same reasons. It's going to be about who turns out over who is in the nomination. So for example, I think it's a foregone conclusion by most people right now. Not me, but foregone. But these guys, I'm listening to these experts. But it sounds like there isn't a lot of from the people who are who are the opinion makers. It doesn't sound like there's a lot of variance in the idea that Hillary's going to be the Democratic candidate.
Right.
And so the on the other side though, they don't know. They still, although they're kind of poo-pooing this idea of a brokered convention in the Republican side, the insiders on this aren't so sure yet on how the Republicans are going to fall down regarding this. And so there's a real, like, the results on these, the projections on these results change overnight on whether or not it's Trump or Cruz.
Yeah.
I mean, you literally could be a Democrat and you could win because Cruz is in there, and you could be or you could lose because Cruz is the one, and you could be a Democrat who wins because Trump is in there.
Yeah.
And vice versa. And it was just interesting to watch the effects of how their projections went, and they've got Hillary beating Trump handily, but they say it with kind of a nervous shiver in their voice.
Yeah.
Like they're like
Dewey defeats Truman.
Yeah. But what it means to the housing industry, just so you know, that right now there's a feeling among the housing advocacy out there that right now Republicans are not our friends. And Cruz would be very, very bad for the housing industry in terms of what the advocates say. Democrats or Republicans, there's some pretty good feelings that, and we'll go back and we'll start expanding on that in the next session. Now, hold on after that, because we got market stats here from Greg talking about, is your house going up? Is it going down? What's going on in the market? We're going to do that in the last segment. So hang on here after the break on Dakota Housing Network.
Currently, it's 39.
The home for ABC News at the top of the hour is Super Talk 1270.
Yeah, give me shelter. Trying to avoid anything controversial on the show, but we do have to talk politics because it's going to affect the housing industry. And we definitely have some opinions about the housing industry and what the politics are. But as we were going to the break, Cruz is viewed as very bad for the housing industry, and the reason why that is, folks, is because he's against the GSEs. And most of Republicans' party seems to be. They want them gone. They want them reformed. They think there's some way to turn this back over to the private markets. And just to be honest with you, you can't do it. Nope. You will destroy if your house is worth $300,000 today, and you get rid of the GSEs, you get rid of Fannie Freddie. Welcome to watching 50% of the value in your home evaporate in a private market situation overnight. Well, realtors don't disagree, right?
I don't disagree. The other thing is private market, free market investors in mortgages are not interested right now.
They're not.
They're not interested in a private mortgage because it's a lot of capital tied up into little return.
Especially under current regulations.
Yeah.
What you have to do to supply it. So you're talking about the end of the 30-year fixed rate mortgage. You're talking about the end of the 20-year, 15-year fixed rate mortgages, and that will dramatically
the end of less
smash
than 20%
the value.
Down.
The low money downs. But this idea that private capital is going to come into and save and be able to support the housing industry is like saying, you know what? We can completely manage our national infrastructure privately.
Yeah.
We don't need any public funding for that. No. So bridges, roads, interstates. No. You know what? You want interstate in your neighborhood? You build interstate in your neighborhood. Go find a private company to help you raise equity and do it. Your city can just figure that out. Folks, the mortgage industry alone, Fannie and Freddie, the GSEs are $5 trillion. Trillion.
Yeah.
When you're talking about the size of the housing industry and the impact of the economy, the stimulus bill, which was the largest in history, was $2 trillion. Our GDP is like somewhere around 17 trillion. It's 1/3. That's not the entire housing industry. That's just Fannie and Freddie. That's not Ginnie. That's not FHA. That's not
the private market.
And then that's not the private markets in the. You're talking about a $10 to $12 trillion industry.
Yeah.
This is it's too massive, and the flow of money through that economy, the housing economy, is too important. It would be like going, you know what, we're done. The Federal Department of Transportation, just shut that down. Yeah. And you know what, the IRS, shut that down, because you know what,
okay.
if you guys
Social Security, throw it out.
But if you just did that overnight.
Yeah.
Where does North Dakota get money for interstates?
Yeah.
Montana builds its interstate 15 miles or 50 miles south of the one we're building?
Yeah.
Now, who pays for connecting them?
Yep.
I know it sounds like it sounds like a good idea in terms of just a philosophical idea of free markets winning. But the housing economy is more like the transportation needs right now.
It's just the way things are set up right now.
Right.
Yeah, it is too big.
Yeah.
Of an economic driver to dismantle it. And the truth is, it's a lie that the GSEs have done a bad job. That's a lie. I'm going to say it boldly.
That's coming from both parties.
Yeah.
That lie? Yeah. Yes, that lie is coming from both parties.
Just to be open and fair about it, the Republicans that are most under the gun for housing that economists and people say is bad for housing really is the Tea Partiers and the Libertarian side of the Republican Party.
Yeah.
That's why Ted Cruz is considered, because it's government get out. It isn't right. And in housing, like you say, this is one of those industries where that would be an issue, probably a collapse of the industry for a while. It isn't mainstream necessarily Republicans that are saying that, but you know how it gets spread out over the party.
Well, so. I asked the CMLA guys, I said, why aren't the Democrats on the GSE side? Okay, if I'm a Democrat, and for strategically speaking, Fannie and Freddie, FHA, they have served, between the three of them, to some degree, they have served us for nearly 100 years.
Yeah.
100 years. They have built, between them all, they have built a housing market that is the envy of the world and survived the biggest, a worldwide cataclysmic downturn not seen since the Great Depression.
Yeah.
We gave them we spent $180 billion in terms of the total bailouts to all of them. They've returned over $200 billion to us. And the only reason why they don't have reserves is because every time they put them in the account, the Treasury sweeps them out.
Right.
Mm-hmm.
The only reason they aren't adequately capitalized, when you see that Fannie and Freddie are undercapitalized, well, the reason why is because Congress has approved the Treasury sweeping their accounts every time. Imagine if
Kind
the
of like Social Security.
Imagine if the IRS had the permission to, every time your employer put money in your account and then you paid your bills and you had $500 left in there, the IRS could say, not so fast. We have just a free reign to just sweep whatever the surplus in your account is. Well, that's the way that Fannie and Freddie are being managed right now in the federal government under conservatorship. That's why they have no money. In the time frame, they recovered and started returning profit back in less than 4 years after one of the greatest financial collapses in history.
Yep.
And let's be clear. Let's be clear why they had financial collapse. They ran themselves responsibly and beautifully up till 2004. It was
mandated.
It was in 2004 when a couple senators, one of them named Mr. Dodd,
The other
and another one named Mr. Frank,
Good old Barney.
started putting
Speaking of
pressure.
Barney with a bullet.
Started putting pressure on them to compete with the private equity markets.
Nip it in the bud.
They said, you're not competing. You need to compete with the private equity markets. The banks are taking over all this business and you need to expand. So they start expanding credit. They start doing risky loans. They started providing insurance and backing to some of these risky mortgage-backed securities.
You have to accept loans you know will fail.
And insure them and guarantee
insure
them. And the result is that in about a 3 to 5 year period, they put stuff on the books they never had done before in relationship to pressure to the government. The consequence was when the market collapsed, they got taken in with it. In less than 5 years, they've recovered from that. They've paid back all their money. That's what a government-sponsored entity is. A government-sponsored entity is an implied guarantee from the government that you're going to build a great thing in our economy. You're going to back a private infrastructure, which it is. I work for a private bank.
Right.
I do mortgages. You're going to back a private, and if we get into big trouble, we're going to bail you out. That's what it is.
Yeah.
So they bailed them out, and in 4 years,
They paid it back.
and they're running wonderfully right now. It worked. If I was a Democrat, I'd be going, this is big government at work in a great way. I would be. And so why aren't they? Where are they at? Why aren't these guys trying? Why aren't they telling this as the success story? 100 years of service,
Because
a small bailout that's already paid back. Mm-hmm. This is government at work in a great way to support one of the fundamental needs of our families, a home.
Yeah.
And they're not for it because it's a golden goose. They want more eggs.
Well,
Everybody's invested in the system as is.
Well, I guess some of it is the answer from the CMLA was it's too risky to come out with that position because the Treasury's against it, against the GSEs. That you have too many. You'd be this lone voice in the wilderness, and I guess the last lone voice in the wilderness we talk about, John the Baptist. His end wasn't so good.
Yeah, but the results were great.
The long-term results are great. So if you're willing to be John the Baptist as a Democrat, the result will be great. We promise you.
Yeah, and you talk about private market, private industry. Fannie Mae and Freddie Mac were set up to where me as a private citizen, I could invest. And I got a great dividend. They've stopped that. Why?
Because they pay the preferred.
Yeah.
And who are the preferred?
Yeah.
It's the Treasury.
But if you had the hope of a dividend, that's where private industry would support the housing industry in a big way, is investing in Fannie Mae and Freddie Mac.
There's no doubt that there's some need for some, but Mel Watt is doing an amazing job of reforming them.
Yeah.
If we took the reins off him and just let him finish the job, we'd be very proud of what they were because they would look a lot like what they were before the crash.
Is there a way we can have the best of both worlds? Is there a way we can do that, mix the two? And
we actually had it.
That's what we had.
Okay.
Yeah.
That's what we had until the House and the Senate started saying you got to do more loans to compete with the private market. That's what happened to FHA. FHA only had 2% of the market share because the private industry was doing so good. And they said you got to get a bigger market share.
That's right.
Why? Because the government wants the money.
That's right.
From the industry. So anyway, we'll come back. Greg's going to do market stats. He's going to talk about all the things going on in the market, what's going on with home values when we come back after the break here at the Dakota Housing.
Okay then.
Currently, it's 50.
Super Talk 1270, home of the Bismarck Bobcats and high school sports. Listen online or anywhere on the Radio Pub app. Super Talk 1270.
All right, well, we're jumping, Jack, right into market statistics here on the Dakota Housing Network.
Gas.
Yeah. Greg Larson,
Hey,
tell us what's happening in the market out there.
it's actually pretty good. Before we do that, I just want
Wait
to
a minute, they're still selling houses out there?
Oh, yeah.
Okay.
March 10th, 1876, probably the most famous words spoken that year were,
What year?
on this day, 1876, Watson, come here, I need you. Alexander Graham Bell got the phone to work.
Yeah.
I was thinking it would be Custer, but that was later in the year.
Yeah, where'd all these Indians come from?
Yeah.
We found them.
Yeah. Okay, we have met the enemy in there. Huge.
We, Kimosabi.
Well, we found them.
Yeah, okay. Let's start first talking about just a national thing. The National Association of Realtors puts out a housing affordability index, and we've talked about it.
Yep.
And it isn't a percentage, it's just based on 100. If your index is 100, it means your affordability is equal to your income, okay? So if it's higher than that, it's better. If it's lower than that, it's worse.
Right.
Okay? And we are split into 4 quadrants. We are in the Midwest. There's the Northwest, or Northeast, there's the South, and there's the West. The Midwest is really doing well. Let me just give you the numbers current as they stand this month and then a year ago, and a month last month and then a year ago. In the Northeast, the median price house is $257,800. Pretty strong. Mortgage rate is 3.99. Monthly principal and interest is $983. As a percentage of income, that's 15.1%, with the median family income being $77,900. Qualifying income that you need then for that house is $47,184. So their affordability index this month is 165.1. A month ago it was 166.6, and a year ago it was 1.96. So in the Northeast it hasn't changed much. Interesting that there was a big uptick in home sales in the last quarter of 2015 in the Northeast. In the South, the median price is $200,200. $4.22 is the interest. 14.9% is the payment as a percentage of your income. The affordability index was 167.3. Last month was 176.1. A year ago it was 175.6. So in the South, it's just a little bit less affordable now than it was a year ago to own a home. In the West, and this is the one that usually does the worst, actually, the median home price.
We're talking about California,
Oregon, Washington, Arizona, Nevada.
Yeah, they've been bringing it down a little bit. But
well, the median home price is $324,900. Man. With a median income of $71,504. So you need 21% of your income to make your house payment. So the affordability index still above 100. It's 118.5. Last month 122. A year ago 124.8. That's a downward trend. That's kind of significant. We'll have to watch that.
Still, though, what's impressive about that, historically speaking, before you get into the local stuff, is that when you look at what the average home price was back in 2010, 2011, 2012, we actually went to the top of the markets with the highest average home price in North Dakota compared to these states. So the idea that we're back to the West being at 300 and some thousand and some of these other places being up there, although there may be a downward trend in affordability, that's a good thing.
Yeah,
the
market is recovering.
It's a good thing. Everybody shouldn't be able to afford a home in a market where the housing market's healthy, and the fact that it's over 100, you might hear that and go, "Oh, that's great." Well, no, it's not necessarily good because it tells you that the investment in home ownership is down.
Yeah, remember, 100 is optimum.
But it's significantly better than where we were. I mean, there's been an amazing recovery in housing market. And who's leading the way on that? Who are the ones doing all the home loans? Back to my original point, where are all these home loans going?
Fannie
And Freddie.
So here locally, now this is the Midwestern states. The median price is $172,200. Now that's much lower than it is in Bismarck, but the numbers bear out because of our income and stuff. So it's 4.23%, and that is higher than what it is around here. And I'm not sure I can explain that, but the percent of income is 11.9%. The composite this month for affordability is 209.5, which is significantly higher than anybody. Last month it was 214, and a year ago it was 224.0. So that trend that it's coming down in affordability is just a reflection of the slowing economy in this area because Texas is, part of the Midwest, and so
Oklahoma, Texas,
the energy
North Dakota,
producing states
Wyoming.
where things are off, and the ag producing states which are off. So it's a normal reflection, but it's still very affordable. And when you look at income, median family income as opposed to the median list price and sale price of homes in our area, which I'm going to walk into right now, that housing affordability is at about 200. So we're not out of the ballpark with that. So
no, this is still the Midwest.
Yep.
Is still, in terms of home ownership, the best place to be.
Right.
I mean, it really is. I mean, the in terms of being able to afford reasonable housing, this is anywhere along the anywhere either side of that Mississippi corridor.
Yep.
Pretty good place to live.
Yep. So I'm looking at the best stats I have. This is year to date, and it's end of January 2015 to end of January 2016. The number of units sold is up for Bismarck. It's way off for Bismarck rural. It's off 56%, but that's a difference of 9 houses to 4 houses. So it's not a huge,
right.
We're not dealing with big numbers here. City of Mandan is off. Mandan rural is up 300%. And outlying towns are up 80%. But the total number sold for year to date is up 3%.
I've seen, and this is anecdotal, and I don't have stats to back this up, but I've seen that every time gas prices have gone down.
Yes.
My career, haven't you felt the same way? I mean, it's a feeling. It's not that I can pull up the stats, but I always felt like Washburn, Wilton, people were more willing to
move out of town.
More willing to move there, even if they're community Bismarck, when they had low gas prices.
Yep. And we're off. Our average sales price and average list price is off from $294,356 down to $248,833. It's off 15%, simply because we are now getting rid of our high-priced homes and more aren't coming on the market. If you take any house under $450,000, say, all these are up a tad.
Yep.
So that's the deal, and it's the same thing with the average sale price. We've gone from $286 to $240. Same reason. And
the economic impact there, folks, is really where loan limits. A lot of people don't understand how home loans work, but the end of the affordability limit is in the 270s. When you're talking about North Dakota Housing, their program, and FHA, it's 270, 150, and then North Dakota Housing is a little higher than that depending on the program, and depending on the county you're in. But that's the end of that. So as soon as you start getting over that, you start the options for loans start paring down. And so then you get into only conventional up to 417. And that's why what Greg's talking about happens is it's about how people finance it. So if you don't think financing affects home values, back to the political conversation we're having about Fannie and Freddie, if you don't think available financing affects finance, you're nuts.
And what we're seeing is what's called a compression in the market. We don't have as many high-priced homes, and we don't have as many low-priced homes. And that always will give us a lower median average price because, we're balancing out more in the middle.
It'd be interesting when you look at that affordability index and you look at that affordability index being around 170 in the Midwest price range and on average price range. We're sitting at around 200. What do we got for average sale price?
Average sale price from February was 264.
264. Don't you think that probably our affordability index in Bismarck? This is just totally ballparking it, finger in the wind, trying to judge the direction. But don't you think it's got to be right somewhere between 95 and 105? It's almost got to be almost right in the sweet spot.
Yeah,
for our wages.
Anytime you pull just single families, because that affordability index is everything. It's condos,
It's apartments and
townhouses,
everything, right? Yep.
It's, all of that land. It's all of that. It just does not reflect commercial. So, yeah, that's what that affordability index is. In Bismarck, Mandan, the affordability index for just single-family homes is, I would say, probably about 120.
A little bit higher than that, I was thinking. Okay.
Yeah.
Well, folks, thank you for tuning into the Dakota Housing Network. We had a little fun today. Brought in a little political conversation, commentary, along with we had some great market stats here for you. Tune in next week. Who's on next week? Is it you? Oh.
No,
it's
next
Brian.
week is Brian.
Brian Ritter. Oh my gosh, you'll know everything that's happening in town. You'll be able to book your reservations in restaurants that don't even exist yet.
All right.
Talk to you.
Okay.